Hi, this is Victoria Green. I am owner-broker with Dervik Real Estate with service Fort Bragg area. In this video, I will discuss typical closing costs on VA loan in Fort Bragg area. So for this example, let's use closing date of August 22, 2022. So right here you see the buyer's side. This has everything to do with the buyer. On the left side, this is seller's side. So first item, lender credits. Apparently the mortgage company that this buyer used, they gave him $35 credit. So it is put right here, $35. The sales price of the property is $285,500. So the first item for closing cost right here is loan charges that your mortgage company will charge you at closing. And this particular mortgage company charged 0.042% of the loan amount for points. And it came out to $122.67. It could be that by paying the $122.67 that the borrower, the buyer, might have received a little bit better interest rate. So the next items we see is origination fee to mortgage company. In this case, this mortgage company charged $2,920.66. So many of your mortgage companies that you find online, like if you Google in VA mortgage companies and the first 5 that come up, traditionally, they will charge you 1% of the loan amount for origination fee to mortgage company. Now, I want my veterans to be aware that this fee right here can differ from mortgage company to mortgage company. I have a local mortgage loan officers. Their company charges $1,100, period. If you are purchasing $300,000 home or if you are purchasing $400,000 home, they will only charge $1,100. Some charge 0.5% of the loan amount. Some charge only $600. So it's very important when you shop around for a mortgage company. Interest rates is only one aspect of loan. You also have to compare closing costs. And for example, if this particular veteran would have went with a local mortgage company, he could have saved several $1,000s in closing costs. So every time I see this, it's, I wish more veterans would have been aware of these charges. But let's go to the next point. Here we see VA funding fee to the Department of Veterans. And what this fee is, it changes. If you purchase the home for first time, it's certain percent. If you purchase it for third, fourth, fifth time, then it's another percent. And this fee you do not have to pay at closing, but this fee will be added to your loan amount. See how the sales price is $285,500 and loan amount is $292,066. The VA funding fee was added to the sales price and we came up with the new loan amount. Very important to know for veterans that if you do have VA disability percentage, you will not be charged this VA funding fee. So, next item that you will have to pay is prepaid interest rates. And what the mortgage company does, your monthly payment, whatever the interest rate that they use, they will calculate it how much is your interest rate per day. Now, since we're closing on August 22, you will occupy the house from August 22, and the mortgage company will charge you $43.01 from August 22 until September 1st, 2022. It came out to $430. Please remember, this number will be specific to your loan. This number will depend on the loan amount. This number will depend on the interest rates that you will be able to secure from your mortgage company. And this number will differ depending when you close. Let's say if you close beginning of the month, it will be larger. Let's say you close on August 31st, then you will only pay $43.01. So by paying the prepaid interest rates for the few days in August, these buyers' first mortgage payment will be due October 1st. Because the mortgage company cannot charge you the interest rates for the full month unless you borrow the money, you use the money for a whole month of September, and then in October they will charge you the interest rates for September. Next item is homeowners insurance for 3 months. So with homeowners insurance, you, the VA borrower, you have the opportunity to shop around for your home insurance. Whatever the amount is for the full year, the mortgage company will divide that amount by 12 and then collect 3 months worth of payments. So monthly payment for homeowners insurance was, in this case, $136.33 times 3 came out to $408.99. The mortgage company will collect this at closing. They will put this money into an escrow account. And every month when you make your mortgage payment, you will pay your principal, your interest. You will pay $136.33 for homeowners insurance, and the mortgage company will take this amount and will add every month this to the escrow account. So next year, on August 22, 2023, when the mortgage homeowners insurance payment is due, the mortgage company will have enough money in their escrow account to make the payment for homeowners insurance from August 2023 until August 2024. Next items we see on this closing disclosure is property taxes. And the monthly property tax bill is $140.92. So you take the bill for the whole year, you divide it by 12 months, and you come up with a monthly fee, $140.92. In this case, being that we're closing in August, the mortgage company required 11 months for property taxes to be added to escrow account. So, just like with the homeowners insurance, the same applies to taxes. Every month you will make your mortgage insurance, you will pay your principal, your interest, you will pay your $136.33 for homeowners insurance, and you will pay $140.92 for your taxes. The mortgage company will take this amount, will add it to an escrow account. So when the tax bill is due, the mortgage company will have enough money in escrow account to pay your tax bill for 2022. So the next item, this right here, there are some rules and regulations that determine how much money can a mortgage company keep in an escrow account. And there is a threshold, there is limit to how much can be held. So in this case, it was $545.32 too much, so they have to adjust it accordingly and credit and give it back to the buyer. It's very confusing. That's just the way it is, right? So the next item you will pay is lender's title insurance, and the attorney will collect this money and will pay it to the title agency. This fee is calculated based on the sales price, and the title insurance is to protect the mortgage company. So let's say you purchase a home and there are some title issues that the attorney has not been aware of, and somebody comes and questions your ownership to the property. In that case, the lender's title insurance will come in and they will resolve the issue with addendums, with recording deeds, and several other opportunities. So lender's title insurance is there to protect the mortgage company. Now, owner's title insurance is to protect the owner. And it's very important to understand that when you initially purchase the house, and particularly in this case, the sales price, the purchase price of the home is $285,500. However, the loan amount is higher than the purchase price. So you do not have, in many cases, if you're purchasing home with VA loan, equity in the property, so you don't have much invested in it. Therefore, the lender's title insurance will protect the mortgage company because they have the most invested in it. And then as you grow your equity, then you will definitely benefit from this owner's title insurance. Recording technology fee, that's something that the law office will charge you, and this is to record the deed electronically at the county where the property is located. And then this title examination fee, this is what we call attorney fee. In North Carolina, we must close a real estate transaction with an attorney. Many other states, I was licensed in Texas, there the closing can be done at the title company. In North Carolina, we will close with an attorney, and this fee is negotiable. some attorneys charge more. This is some charge a little bit less, but on average anticipate to pay around $1,000 attorney fee for closing. Then this right here is the recording fee. This particular home was in Harnett County, and they charged $90 to record the deed. So in this case, appraisal fee was paid outside the closing. What it means, when the veteran applied for a loan, the mortgage company collected $800 from the buyer and paid the appraisal. Many mortgage companies do that, some don't, and if you did not pay for your appraisal fee prior to closing, you will have the $800 part of your closing cost. So next thing is your homeowner's insurance premium for 12 months. What the mortgage company will require you to do, you will be required at closing to pay full year coverage for homeowners insurance. So with this, the closing costs are very typical. This is what VA buyer will be charged. Some items are will not change. Some items are negotiable, and some items will change based on the time and date you will close on your property. If you have any more questions about closing costs, please let me know, because this is just an overview.